In its latest 8K filing, Tesla announced that it plans to seek approval for a stock dividend at its upcoming 2022 shareholder meeting. The stock soared 8% on the news. You heard that right. I said stock dividend. Then why are so many outlets, including Tesla's own Twitter account, calling it a stock split? That's because a stock dividend is substantially different than the cash dividend we're all used to. In this video, I'm going to explain what this news means for Tesla stock and why stock dividends have far more in common with stock splits than dividends. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. On dividend data, I typically analyze companies and share the progress of my long-term dividend growth stock portfolio. However, I don't invest exclusively in dividend-paying companies. If you're a long-time follower, then you know that Tesla is actually my largest investment by current value. This is a rare opportunity for a crossover video. So what is a stock dividend? A stock dividend gives shareholders a number of shares or fraction of shares per every share they own. This contrasts from a cash dividend where a company simply pays out part of its profits to shareholders. Stock dividends, unlike cash dividends, dilute the value of each share like a stock split. So as we can see here, Tesla currently has 1.033 billion shares outstanding. So if they give 2 shares per every share owned, then that would mean Tesla would have 3.099 billion shares outstanding. The relative value for each individual share decreases. This would be the same effect as a 3-to-1 stock split. So what's the difference? When stocks split, the market adjusts immediately, changing the price of the stock so that investors have the same overall amount of value while simply having more shares, each of which is less in value. However, whether the same happens with stock dividends depends on how efficient the market is. If the market responds perfectly to changes in supply, it should adjust prices accordingly, making a stock dividend the same as a mini stock split, accruing no actual value to investors, unlike a cash dividend. However, if the market reacts differently to a smaller increase in the supply of shares than a larger one, i.e. not adjusting their price accordingly, then shareholders may be better off. It will be interesting to watch play out. Now I'm going to explain how this will impact the value of Tesla stock. Then I will answer whether Tesla will pay a cash dividend in the near future. Elon Musk actually commented on that exact question a few months back. If markets react logically, this move should not impact the value of Tesla stock. All stock dividends and stock splits do is cut the same pizza into more slices. The pizza is not more valuable because it has more slices. It's still the same pizza. The business of Tesla is still the same. That said, the announcement of the last Tesla stock split in 2020 caused a big rally in the price. The arguments for a stock split is that the lower share price means more retail investors can afford to buy the stock, since many brokerages don't allow the purchase of fractional shares. Also, a lower share price makes option trading on Tesla more affordable. This may cause interesting trading dynamics, but has no impact on the long-term value of Tesla as a business. Does Tesla ever plan on actually paying a cash dividend? At Tesla's October 2021 shareholder meeting, Elon answered this exact question.
Does Tesla plan to offer dividends? We do not currently have plans for dividends. I do kind of feel like the time when a company offers dividends is, it's kind of cresting the hill, if you will. It's usually not, they've run out of things to invest internally. We've not run out of things to invest in internally by a long shot.
Elon is right. Tesla should not pay a dividend anytime soon. Currently, they can increase shareholder value far more by reinvesting capital into the business. That said, I do want to add context to his reasoning. The decision to pay dividends is relative to every company. Successful and mature companies often pay dividends because they make far more money than they can intelligently reinvest into their business. Tesla has only been profitable for over 2 years and still has massive expansion underway. They need the capital to build more factories and invest in new product categories. Tesla is not at a place where they can intelligently pay a dividend. That would be a bad decision. However, companies like Microsoft, Apple, and Coca-Cola are at a place where they can pay out dividends. They make far more money than they can intelligently reinvest in their business. If you want to learn more about some great dividend-paying companies, then check out my other videos. I'd greatly appreciate if you could leave a like and subscribe to the channel. You can sign up for dividenddata.com to use my research software and join a Discord community of like-minded investors. Thanks for watching.